Hey guys, Max here, and this is your daily market update for yesterday, the 14th of February. It was a Monday. Markets were open and they weren't too happy. Stocks sank across the board, risk sentiment deteriorated, and we had a few other developments regarding some things like Elon Musk and Cathie Wood, so let's just get right into it. So the markets themselves, what actually happened? Well, American equities by and large declined across the day. The S&P 500 fell 0.4% by closing, but it was down by over 1.2% at one point. The Nasdaq started off strong but saw declines by as much as 1% as well before closing pretty much exactly where it opened, and the Dow Jones saw a 0.5% decline. Now, why were equities down for the most part? Well, there are a few reasons as usual. The Ukrainian president made a joke about a specific date that Russia would invade, but it wasn't really taken as a joke immediately, so markets got a little bit spooked. Oil prices also spiked on this joke, on the idea that supply would be harder to come by. It was, though, just a joke about the 16th of February being the day of the invasion, based on the idea that lots of other people are trying to put a specific date on when the invasion will happen, which just can't be done. Of course, it's the 15th today, so maybe I'll be made to look like a fool tomorrow if it does actually happen, but let's hope not. Now, outside of this, there is both positive news and negative news regarding the situation in Ukraine. The positive is that Russia is claiming that some of their troops are starting to return to their normal bases now that they've taken part in their exercises. This would be nice to see. I'm not sure if it's actually true. I don't think this is confirmed, and there are fears that Russian forces will never leave certain places like Belarus now that they are there, but this is positive news if it's true and the markets like it. The negative news, though, is basically that the US is still convinced an invasion of Ukraine is coming, and they are more on edge than they have been in the past, and this is because they've apparently just seen Russian long-range artillery setting up firing positions targeting Ukraine. The guidance from Western intelligence is still that an attack may be imminent, and that if it is to happen, it will be soon, while the exercises are still ongoing and Russian troops are ready to move. Tensions are probably going to remain high for another week or two. Developments are going to keep coming out, politicians are going to keep talking to each other, and so we really should be expecting volatility to remain high for at least the next week, even if Russia doesn't really have any plans to invade Ukraine. All this chaos, these rising fuel costs, and this discontent in Europe between different nations and allies plays perfectly into Russia's hands, so we should expect them to try and accentuate and push these happenings further. Now, for the rest of the markets, the US dollar saw a slight slide, 0.2%, but the US 10-year Treasury yield rose 5 basis points and it now sits at 2.04%, which is basically the highest it's been for over 2 years now. Oil prices as well are still very high, but they did fall about 3% after these little fears about the Ukrainian president's joke subsided, and WTI crude oil now sits at about $93 a barrel, and gold also fell about 1% for the day, but again, it's still sitting pretty damn high at about $1,850 an ounce right now. Crypto markets have been pretty volatile recently, rising and falling a fair amount. They fell the day before yesterday, but rose yesterday itself by between 5 and 10% across the board. Bitcoin is now sitting at $44,000. Ethereum is sitting at $3,100. Altcoins rose by as much as 12 or 13%, so a decent day across crypto as risk sentiment cleared up. Now, this does again line up perfectly with the idea that they are risk-on assets. Crypto markets were open overnight, and the markets rose just like S&P 500 futures did. Now, on to the rest of the world. What is actually going on? Well, there's once again growing pressure on the Federal Reserve to tighten their monetary policy at a quicker rate than is currently planned. St. Louis Fed President James Bullard has reiterated his position and his belief that the Fed needs to raise their rates by 1% by July, which is far, far steeper than what the Fed is currently targeting. Across the board, banks and institutions are pricing in more and more Fed rate hikes as inflation fears are increasing. Inflation itself is increasing, and with supply-side shocks not subsiding anytime soon, quelling demand is starting to look more and more reasonable to more and more people. One thing that is interesting and is something new is the idea that while markets are pricing in rate hikes now, they are also starting to price in fewer rate hikes further out into the future in 2024 and onwards, and even rate cuts around that time as well. Now, the idea here is pretty simple. Banks are measuring the likelihood of a recession in the next couple of years as more and more likely. They expect rate hikes to maybe cause or even trigger a recession and poor market conditions, and they then expect the Fed to backtrack on their rate increases and go back to looser monetary policy. Now, Elon Musk has, of course, been in the news an awful lot over the last couple of years, and one of the reasons for that is because he's very quickly become one of the world's richest men, or in fact, the richest person in the world. Obviously, it fluctuates with Tesla's market value, but he has huge amounts of attention on him. He made news last year for being the single most taxed person in history when he exercised stock options, and I believe he paid something like $12 billion in taxes, which is a ridiculous amount. Just to put that into context, that's the entire military budget of a country like Spain. Now, the news here is that at the end of 2021, Elon Musk donated $6 billion worth of Tesla stock to unnamed charities. Funnily enough, though, $6 billion is pretty much the exact figure that he told the UN World's Food Programme he would donate if they made their accounting open source and showed him the plan for how they would end world hunger, as they claimed they would. Now, I do very much doubt that he gave that money to the UN, and to be honest, I hope he didn't, because it's an incredibly bloated organization that is pretty useless at the best of times, but it is possible that that's the direction he went in. Either way, it's one of the biggest singular philanthropic endeavors ever made in history. You may not like Musk, you may not like Tesla or SpaceX, but you can't speak ill about this deed. No doubt, some people will try to, some people will claim it isn't enough, that he's only done it for tax purposes, that he's still too rich, that he ought to have everything taken from him, but those people will never be satisfied. Now, Cathie Wood is back in the news again as well, this time for buying the dip on another company that has been getting hammered recently. Sea Limited is a gaming company that is pretty damn huge. It's based in Singapore, it went public in 2017, and at its peak it was worth over $150 billion, and it has excelled in Asian markets, but it took a major hit the other day as one of their biggest, most popular games was banned in India. Now, India is one of its biggest markets, and the company lost $16 billion in value in one day as this sparked fears from investors and analysts that the company could be targeted in other ways as well, and that this will impact their future revenue prospects. Now, for context, India has banned hundreds of Chinese apps over recent years, but Sea Limited isn't really a Chinese company. It's Singaporean, though it does have ties to China. Its biggest individual investor is Tencent, which is obviously Chinese, and its founders were born Chinese as well. Either way, investors thought that Sea was far enough detached from China to be safe from getting caught between two countries in geopolitics like this, but they were wrong, and so the share price tanked. Now, Cathie Wood's firm bought up a load of Sea on this dip, on the idea, I guess, that this fall is overstated and unnecessary. ARK bought up 145,000 shares. Now, this is very on brand for them. Gaming is a huge growing industry that can be very profitable, and ARK believes the industry is only going one way, and that way is forward. The reason Cathie and ARK are getting some flack for this decision then? Well, it's for the same reason they got flack back when they invested into China in 2021. Cathie was looking too much at the companies themselves, how well run they are, their prospects for growth, but not the regulatory risks surrounding them. She got stung a huge amount by plowing into Chinese companies, only for them to get attacked by the Chinese state and for her to lose her investors billions. Now, there is a lot of talk that the same thing is happening here, that Sea is going to get caught up in the crossfire between India and China. Whether that actually will be the case in the end is anyone's guess, to be honest, but this is without a doubt a risky investment. Now, in DiDi News, the ride-hailing app from China that was crushed by Chinese regulators after it decided to list in the US, well, the company is struggling as you would expect, and the company is planning to cut 20% of their staff before they list in Hong Kong. The company's growth and momentum was stopped in its tracks instantly as the Chinese state literally stopped them from growing. They took their apps off the App Store and banned new people from joining the platform. Now, they aren't cash flow positive, they need to grow to survive, and they are also expecting to be fined $1 billion or $2 billion in US dollars for their supposed transgressions against the Chinese state, so they need to cut staff, and they're going to have to cut a lot of them. Now, finally, over in Pakistan, we've just heard from the country's central bank that cryptocurrencies pose more threats than they do benefits, which means the country is likely to go the route of China and fight against them, and maybe even ban them as well. This comes after Russia has gone the opposite direction, and India is sort of moving in the opposite direction as well. Now, it would be nice if the world's governments all embraced crypto, but that isn't going to happen, and we should be pragmatic about this, not optimistic. There is going to be a divide between those countries that allow the technology to thrive and those who fight against it every step of the way. Now that is it for the day. The rest of the week should be pretty interesting though. We have US PPI data coming out, which is another measure of inflation. We have the minutes from the Federal Open Market Committee coming out, and the last time we saw them, we saw the January market crash, so that could cause some volatility. And we will also hear from some senior Fed figures as well, as they give talks on the state of monetary policy and the economy in the US. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buying sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.